In a world of fast money and fleeting trends, one name stands as a monument to patience, wisdom, and enduring success. Warren Buffett. He isn't just an investor, he's an institution, a man who transformed a small textile company into a global powerhouse, not through complex algorithms or higher-risk gambles, but through a philosophy as simple as it is profound. But to understand the billionaire, we must first meet the boy. Born in Omaha, Nebraska, in the heart of the Great Depression, young Warren showed an early fascination with numbers and business. While other kids were playing with toys, he was reading books on finance and charting stock prices. At age 6, he bought his first six-pack of Coca-Cola from his grandfather's store for 25 cents and sold each bottle for a nickel, pocketing a 5-cent profit. It was a small transaction, but it held the seed of his entire life's philosophy: understand the value, buy at a fair price, and let the power of compounding do the work. His journey began in earnest when he discovered the book The Intelligent Investor by Benjamin Graham. For Buffett, it was a revelation. Graham's principles of value investing, of buying stocks for less than their intrinsic worth and holding a margin of safety, became his North Star. He enrolled at Columbia Business School just to learn from Graham himself. This wasn't about chasing hot tips. It was about treating a stock purchase as buying a piece of a real business, a business you understand, a business with a durable competitive advantage, an economic moat. In 1965, Buffett took control of a struggling textile mill called Berkshire Hathaway. The textile business was failing, but Buffett saw an opportunity. He began to use its cash flow to invest in other, better businesses. He bought into insurance companies like National Indemnity. Drawn to their float, the premiums collected up front that could be invested before claims were paid. This float became the rocket fuel for Berkshire's growth, a massive interest-free pool of capital that Buffett could deploy with his unmatched skill. He didn't chase technology fads or glamorous industries. Instead, he looked for companies with simple, understandable business models, brands people loved and relied on. Companies like Coca-Cola, See's Candies, and the Washington Post. He famously said, "It's far better to buy a wonderful company at a fair price than a fair company at a wonderful price." He wasn't just buying ticker symbols, he was buying into American life, into enduring brands that were woven into the fabric of society. Think about it. While the world was caught in the frenzy of the dot-com bubble, Buffett was criticized for being out of touch. He stayed away, admitting he didn't understand the new tech companies. When the bubble burst, his discipline was vindicated. He invests in what he knows. Within his circle of competence, this simple rule has saved him from countless market manias and protected his investors' capital through decades of volatility. His partnership with Charlie Munger was another cornerstone of his success. Munger, the brilliant, sharp-witted vice chairman of Berkshire Hathaway, was more than a business partner. He was Buffett's intellectual sparring partner. Munger pushed Buffett's thinking, helping him evolve from buying merely cheap companies to buying truly great companies. Together, their combined wisdom created a force greater than the sum of its parts, shaping Berkshire into the sprawling conglomerate it is today. But perhaps the most remarkable part of the Buffett story isn't the wealth he's accumulated, but the life he's chosen to live. In an era of extravagance, he remains grounded in Omaha, living in the same house he bought in 1958 for $31,000. He drives himself to work, enjoys a simple breakfast at McDonald's, and spends most of his day reading. His life is a testament to the idea that true wealth isn't about what you can buy, but about the freedom to live life on your own terms. He sees his fortune not as a personal trophy, but as a resource to be returned to society. In 2006, he made one of the largest philanthropic pledges in history, committing the vast majority of his wealth to the Bill and Melinda Gates Foundation and other family charities. His reasoning was simple: he has everything he needs, and that money can have a far greater impact on the health and well-being of millions of others. He's not just an investor, he's a steward of capital, on a scale the world has never seen. So what is the ultimate lesson from the Oracle of Omaha? It's not a secret formula or a complex algorithm. It's a philosophy for life. It's about patience in a world that demands instant results. It's about integrity in an industry often driven by greed. It's about focusing on long-term value, not short-term noise. It's about understanding that the two most important rules of investing are: rule number 1, never lose money, and rule number 2, never forget rule number 1. Buffett's legacy isn't just the staggering numbers on a balance sheet. It's the timeless wisdom he has shared so freely. He taught us to be fearful when others are greedy, and greedy when others are fearful. He showed us that the most powerful force in the universe is compound interest, and he proved that you can build an empire, not with leverage and complexity, but with rationality, discipline, and a deep understanding of human nature. His story is a quiet, powerful reminder that success isn't a sprint, but a marathon. It's about planting a tree today, knowing you may not sit in its shade for many years. In the grand tapestry of finance, Warren Buffett is not just a thread, he is the loom itself, weaving a story of value, patience, and a life well lived. Thanks for watching. If this story inspired you, consider subscribing for more deep dives into the lives that shaped our world.